Welcome to the TAC Index AI podcast. Here we blend TAC IP data, reports, charts, you name it, with the latest news and logistics, especially air cargo. Today we're doing a deep dive into the recent market updates. We really want to pull out the key insights for you. Our mission really is to figure out this kind of surprising situation. How are air cargo trends holding up when there's so much geopolitical turbulence and economic shifts going on? We'll try and uncover the real drivers shaping global logistics and trade today. Okay, so let's start with the latest numbers. Global air freight rates, we look at the Baltic air freight index, the BAI 0 is the benchmark. They actually edged only slightly lower again last week, down just 0.6%. And if you look back over the whole year, the last 12 months, it's only a 5.3% dip, which, considering everything, seems quite small. What's really striking is just how stable they've seemed, despite all the global noise, right?
Yeah, modest is definitely the word. It's fascinating because, we've seen some pretty significant disruptions. But this isn't a dramatic fall at all. And if you zoom in on specific routes, well, it's a real mixed bag. Outbound Shanghai, for instance, was actually up slightly, 0.5% week on week. But then Hong Kong slipped a bit, about 1.5%. Over in Europe, Frankfurt gave back most of its recent gains. It dropped 4.5% week on week. But London Heathrow, wow, it surged. A really healthy 13.8% jump week on week, which leaves it very strong year on year, up 31.6% compared to, frankly, weaker levels a year ago. We're also seeing the new BAI spot indices out of Hong Kong. They're moving into public trials now, and they really give you a much more granular look at that intense intra-month volatility, the kind that really shapes short-term shipping decisions.
Right, that day-to-day stuff. Now, speaking of volatile things, jet fuel. Prices have been, all over the place recently. How much does that actually impact what you, the listener, end up paying for air freight? Is there a disconnect we should know about?
That is such an important question for anyone in logistics. So yes, jet fuel prices jumped, nearly 20% month on month up to June 20th, mostly due to the Middle East conflict, but then they fell back pretty sharply after a ceasefire, and yet you look at the global BAR index, it barely budged. This disconnect is really key. It tells us something important. Major air cargo lanes, the big ones like Trans-Pacific, Transatlantic, they simply don't fly through Middle East airspace that much. So the direct impact of those regional fuel price spikes on the main global rates, it's actually pretty limited for most lanes.
That's a really crucial insight. Okay, so if it's not just fuel, what about capacity? We keep hearing about freighter capacity shifting around. How's that playing out?
Capacity. Yes, it's incredibly dynamic.
Yeah.
We did see some wide-body freighter capacity pulled from Trans-Pacific lanes earlier this year. That was tied to the U.S.-China trade issues, though some of that did reverse after the 90-day tariff deal was struck. It's just this constant adjustment, this interplay between supply and demand. And there's another factor, maybe a bit subtle, but significant for e-commerce shippers, the end of the de minimis exemption for small parcels, particularly into the U.S.
Right, the low-value shipments.
Exactly. For you listening, this means those small packages from overseas that used to, basically zip through customs, they now face more scrutiny, potentially more duties, and that directly hits the cost and speed for e-commerce, especially on those key China-US lanes. Actually, our own tax space tool, now in beta version 2, is giving much more detail here. Users can track these real-time shifts in available cargo space on specific routes, so you get a clearer picture of where supply is tightening or loosening.
Okay. Beyond the sort of immediate market mechanics, there's this huge cloud of geopolitics and these looming tariff deadlines. How are they really shaping things for businesses?
Oh, it's more than a cloud. I'd say it's like a storm front of uncertainty rolling in. Markets are absolutely laser focused on some critical dates coming up this summer. You've got July 9th, when the pause on higher U.S. tariffs against the EU and others expires. Then potentially July 14th for EU retaliatory tariffs. August 10th for the U.S.-China tariff deal check-in.
A lot to keep track of.
A huge amount. And think what this means for your supply chains. Potential new duties on goods from Europe, new complexities if you're shipping via Southeast Asia, like we saw with tiered tariffs for goods going through Vietnam, plus, unresolved trade spats with Japan, Canada, doubling steel tariffs. It just creates immense uncertainty, makes long-term planning incredibly tough for everyone in global trade.
So if we sort of pull back and connect this to the broader macro market picture, what are the big currents influencing everything?
Yeah, stepping back, the larger picture shows continued scrutiny on U.S. debt levels, especially after the new administration's tax and spending plans. The projections point to the federal deficit hitting, 6.2% of GDP in 2025? That's alarmingly high, adding trillions to the debt. Moody's already downgraded the U.S. credit rating, remember? And the dollar slipped a bit against other major currencies.
But equities seem okay.
But yeah, interestingly, equity markets have been pretty resilient, kind of buoyed by consistent U.S. productivity growth figures. And also this expectation, that the Federal Reserve might actually start cutting interest rates, maybe as soon as July. So these big macro currents, while they don't maybe change air freight rates day to day, they absolutely set the overall economic temperature for global trade, and that affects the volume of goods flying around. So this deep dive, it really shows this complex mix, doesn't it? You've got the specific air cargo movements, this surprising resilience to shocks like fuel price jumps, and then overlaid on everything is the huge influence of unpredictable trade policies and fiscal decisions. As you listening, consider all these dynamics. Maybe ask yourself, how is all this ongoing uncertainty around trade talks and economic policies going to shape decisions for your business? For logistics, for the supply chain in the months ahead, where are your vulnerabilities? Or maybe even your opportunities in this shifting landscape?